Hey guys, so I just wanted to make a really quick video for once. I know people hate sitting through hours of videos and all that kind of stuff. Anyway, quick video just to cover some things that we're getting in emails. Basically people wanting to know, is cryptocurrency crashing? What's going on with Bitcoin, etc., etc., etc. So just understand that Bitcoin, and I'm going to be making a video because Bitcoin is basically blockchain 1.0. We've already covered blockchain 0.0. But we'll be covering blockchain 1.0, which is Bitcoin, in the next video as soon as I get the chance and time to put that together for you guys and get it out to you. But what I want to do is I want to cover Bitcoin itself, and I want to kind of give you an idea of what's going on. As I've told you guys time and time again, cryptocurrency is highly volatile, and Bitcoin's part of cryptocurrency. So Bitcoin's highly volatile, and it can jump $4,000 in literally hours, or it can fall $4,000, $5,000, $6,000 in a couple hours, or it can go on a rocket journey to the moon or past the moon. It just depends. It's highly volatile, depending on what the Fed's going to do and all these other different kinds of things. It'll make a little bit more sense when we cover blockchain 1.0 as far as that's concerned. But I want to show you what I'm looking at right now. I've got this on 3-day trading. 3-minute trading. We're just going to change this up. Actually, while we got it on 3-minute, let's just back this out as far as it'll go. So when we look at the 3-minute trading over the last couple days here, you can see that it is highly volatile. It's been as high as basically 3,900, and it's been as low as 36,649, right? But let's zoom out, and people are like, man, it's just crashing and crashing and crashing. Look, guys, you need to DCA in when BTC or Bitcoin is falling. You need to DCA in, which is to simply dollar cost average into it. So if you bought high, say you bought it at 60,000 and you didn't sell before it started this journey downward, this temporary bear run that we're in, it's just temporary. As it does its adjustments, and right now it's undervalued, but we're not going to get carried away in this video because we're going to keep it short. But DCAN means to dollar cost average. Every time it takes a drop, like when it was up here and it took this drop, you put in another $20 or $100 or whatever you can afford, 1,000, 10,000. If you're a millionaire, maybe 100,000, right? Then you watch it climb and do its thing, and you see all this, and you see this dip. Then you purchase again. You go through all this and all that. You see this dip. You purchase again. Right when it starts to climb back up, every time it drops down, you DCA in, you dollar cost average in, you purchase it at a lower price than you had before, right? But I expect this to continue a downward trend. I'll show you the lines I've got drawn here. So what we'll do is we'll go to 1 day. We'll look at it from a 1-day perspective. We'll have to scale this way back down, and I want you to see the lines that I've got drawn here. So when you see Bitcoin, it started out and it started climbing up here. Hang on 1 second, we got the dogs barking. Okay, so what I've done is I drew the high line for all the peaks that we've gone through from the beginning. We're looking at the overall from the time that Bitcoin came into existence to current time, and we were pretty much flat line through here. So I drew a line starting here where the lows should be before it got kind of astronomical up there in the $69,000 range, right? So we got the uppers and we got the lowers, and you can see we had a downtrend here and then an uptrend. Now we're having a downtrend. You can call them waves if you want to call them waves, whatever you want to do. But my point is, here's your uptrend and here's the bottom where it should be, and I drew another one coming down through here. So when we come down in here, this is our upper highs where we're headed. So if we scale out, you can see we're going up to 80,000 and just keep going. It's going to 100,000 eventually. And as we make the video on BTC or blockchain 1.0, you'll begin to understand why Bitcoin will most likely eventually, many years from now, be worth over $1 million a coin. Okay, we'll get into that in that video as soon as I can get it made for you guys. But your lows are coming right here, and this is where it should be according to the trend here. So this is the trend for BTC on the bottom. This is the upper, and so what we're looking at is this current bear trend. Okay, it's a trend. We're not in a bear market. I mean, if you can clearly see, we're still plenty above the bottom, right? So we're still above the average lows where it's supposed to be. So this is just a temporary bear, just like we had a temporary bear trend here, right? So it's coming down here. So let's go back in here, and you can see that this bottom trend meets this bear market trend. This is the long-term bottom trend, and you can see that what it does, it keeps going up to it, dropping, goes over, it goes sideways, goes up, hits it, drops, goes sideways, goes up, hits it, drops, goes sideways, hits it, drops, goes sideways, hits it. And so this is why we see that now we are basically in, today it dropped. It got up there, it hit the line, so it fell back down. It's going sideways, it's getting close to the line. It's likely going to fall again. So we could see possibly, and there's no telling in Bitmark, nobody can predict what Bitcoin's going to do. I meant Bitcoin. But you can see that this line and this bottom line come together right here at about the $26,000 mark, approximately. So we may go down as low as $26,000. Now, at some point, though, we may go sideways and break out of this downward temporary bear trend. And if we do, then we may start to head up. And then at that point, you might want a dollar cost average in up to a certain point, and then stop buying in, or do it however you want. This is not financial advice in any way, form, or fashion. I just want you to understand that where we should be, if we're following the overall plan, the overall bottom line trend, we could go down as low as 29,000, approximately 29,000, somewhere in there. So, or what is it, 26,000, somewhere in there. Okay, so yeah, we got a long way that we could still drop and still be doing plenty good. If I draw this on out a ways, we could take it on out. You can see eventually the lows are going to be in the $50,000 range, and it's just going to keep growing. Again, a lot of this will make a lot more sense when I'm able to make blockchain 1.0 video, so that you can understand Bitcoin itself and why it came into existence and what its purpose was, and how it literally became a proof of concept. That blockchain can work, and does work, and fairly secure, pretty much immutable, but not completely, not 100%. It's about 99% right now. As computing technology comes along, again, we'll have to come up with some other kind of encryption, because eventually, sooner or later, computers just get more and more powerful, and you'll be able to break that encryption. So we'll talk about all that in the next video. I just want you to understand that when you're in a downward trend like this, what you should be doing at all times is dollar cost averaging in. So whether it's Bitcoin or any other altcoin, right? If you're doing Ethereum or Cosmos or Cardano or whatever you're doing, right? When you're in a downtrend, you should be dollar cost averaging in to bring your prices down. Okay, that's the whole point. So if you bought it at 65,000 before it started this bear trend downward, then what you want to do is every time it gets down to a bottom point and starts to rise again, you want to go ahead and get in there and buy some more. Let's just do this real quick. So you can see it came down and it went sideways. At that point, you should have purchased in there, and then it went down and it went sideways. You should have purchased in there. Then it went down and went sideways. You should have purchased in there. Down and sideways. Should have purchased in there. Again, this is not financial advice. I'm just trying to help you to understand how you bring your costs down. So you bought it at 69,000 Bitcoin, 69,000, and then you averaged in at 57,000. Then you averaged in at 48,000, and then again at, say, around 42,000, and now around the 37,000 mark, and you're bringing the cost down, so that when this thing finally gets done doing whatever it's going to do and takes off, it may come down and then go back over a little bit and then come down, and then it may just suddenly take off at some point. We don't know what it's going to do as far as that's concerned, right? So but if it breaks this downward bear trend, which is just a trend, you're in a up market. You're in a bull market. You can see everything's up. Everything's going up. All of it's up, but we are in a current bear trend. Okay? Again, you need to research, you need to understand blockchain, you need to understand cryptocurrency, you need to understand this thing that's in its embryonic stage of Web 3.0, which isn't here yet, but is being developed, and all these things before you actually invest into cryptocurrency. Because you need to understand what you're doing, and you need to understand the volatility, so that you're not all freaked out when these things come down like this. I mean, it's got to do its corrections. And right now, as far as I'm concerned, Bitcoin itself is extremely undervalued. At some point here within the next several months, it's going to take off, unless there's just absolutely bad news from whatever. But you'll understand more about that in the next video. God bless every single one of you. Father bless you. The Lord be with you, and we'll catch you guys in the next video.